And good afternoon. This is the Elliott Wave Daily Update for the NASDAQ 100 being recorded on Wednesday, September the 24th at 3:40 p.m. Pacific Daylight Time. My apologies for being a little bit behind this afternoon. Had a previous appointment that I could not change. I'm going to start here on the hourly chart. And the first thing you're likely going to notice is that I have, as I discussed in the morning update, that I am putting the minute third wave at this week's highs. That was on the 22nd at 25,027. I'm putting minute wave three there. Previously, I had been counting this sub minuet wave five as an expanding triangle pattern. And everything was kind of okay until we came down again today. I felt coming in this morning, I had labeled this as 1, 2, 3, and then put the four here. And this, I thought, well, it has to keep going. And I did mention this morning that if it didn't and started to come down, I had left it open that if it broke, and actually that was the level right there, if it broke below 24,598, that it would basically break the pattern. It didn't. It got down to 24,627. So it had a little bit more room. In fact, maybe there could have been, well, hold on. It might have been here. It might have been there. And it still did not come down. Yeah, it did break it. Wherever I had it, I thought here in the NASDAQ it broke it. It was the S&P that did not come down and break that level. I have to think before that I had the one there, ABC 1, 2, ABC 3. Yeah, it would have been right there, and it did break it. And I felt that that was too deep to be an overlapping wave one. Now, it did not take out the starting point of wave one. So, but still, overlapping wave one to come that deep, I thought, not. I didn't like it. So I pulled off the shelf and I went back and I thought, because again, as I explained in the S&P update, and if you listen to both, sorry that I'm repeating myself, but I talked about that as an Elliott Wave analyst and following the guideline that Elliott left for us analysts, that you really should work with a preferred count and an alternate count. Well, in today's market, I have a preferred count, an alternate count, another alternate count, and sometimes a third alternate count because the markets have been pretty screwy and there's been changes to how our markets trade with extended hours, with a tremendous increase within the options markets, with the tremendous introduction to all the different variables, all the ETFs, the single stock ETFs, the 3x bullish, 3x bearish, etc. I mean, just product after product after product, which are heavily traded. So that's the other thing. But I'm going to leave you with the one thing that really strikes me, and that's put out by Spot Gamma, which happens to be, I want to tell you, a really excellent firm. And I don't have an affiliate agreement with them. I probably should because I would send everybody over for that to get that product. Well, actually, they have a whole suite of products which are very valuable if you are an options trader. But even as a futures trader, which is what I do, and also within my trade room, this is what we all do, um, it's very valuable information because it is talking about the different levels and where gamma is building and where it shifts to and what happens when it goes through these particular levels. So again, with all the changes that are coming at us at all times, I always will have more than one alternate count. And sometimes it may take me a little bit to figure out which one and what's going to work best. But I had this, I talked about it this morning. I went ahead and I said that I'm going to have to readjust to how this is all going to count up here. And I did. And the biggest change came here. And I did it because I went over to the cash market, which I review once a week, but I do reference it often during the week. And here again, there's the minuet wave 4, end of that running fourth wave. And then you had 1, 2, 3, 4, and then I put in 5. This was always the fourth, but then I was thinking, okay, 1, 2, and then I thought this was 3. But then you back it up. 1, 2, 3, 4, and then 1, 2, 3, 4, 5. And it comes out to 5. And I thought, okay, got to do it. And so I took back the expanding diagonal and counted up that it's 5. Now, the deal is it's like when you're dealing on the futures market, this cash market trades Monday through Friday from 9:30 a.m. to 4 p.m. Eastern Standard Time. That's it. Does not trade over the weekend like Globex does on Sunday, starts on Sundays. Does not trade overnight. It does not trade after, it trades for an hour after, but the futures, the cash market does not trade that extra hour from 4 to 5 Eastern. That every day the future does, and the stocks do. So again, these extended times can produce a slightly different picture in the futures market than what we're seeing here. Now, eventually, since they're both based on the same products, they really need to be close, if not exact, to what each is doing. And sometimes that's a challenge. But today, it worked out. It worked out. And I'm grateful for that, to be honest with you. So, as I left it earlier as well, that what we got going on seems to be 1, 2, 3, 4, and a 5. Now, I think if I break this down to the 15-minute chart, it comes up just a little bit differently. And we kind of have 1, 2, 3, 4, 5. It actually is 5. But I was thinking that I had this is 4, and then 1, 2, 3, and another 4, and then we have one more low to put into there before we get the full 5 down. So that is kind of what I'm looking at here. I need another low that'll put the first 5 down on the 15-minute and the first 5 down on the hourly. And that's the one that's most important to me, is our hourly chart. So I can go 1, 2, 1, 2, 3, 4, 5, 3, and then this is a 4. I need one more to come underneath. You can see that in the hourly. As much as it probably isn't clear, it is. So here we have 1, 2 is very quick, and that was that shallow yesterday. It just kind of bounces back and forth. So 1, 2, oh, actually, yeah. And then 1, 2, 3, 4, 5 of 3, and then 4. And we need one more new low underneath 24,465, I'm going to call it. That's in the NDX, and that'll put in our first 5 down. Let's go back over to the NQ, where the market is trading again. And yes, we're bouncing higher. So how do I need to leave this? Right now, you can see 1, 2, 3, 4. I need to put that 5 in. It's like, okay, well, what if it doesn't? And it just finishes there and we start to rally back up. Well, then it is going to be labeled as an A, B, C. And when it does that, well, then we're back into this other crazy expanding. Now, not that I think that that's my number one choice anymore, but I can't disagree that it isn't. So we already have 1.618 here, and that would be where wave 5, right? This 5 would be equal to 1.618 of the first wave, right? So sub minuet wave 1, sub minuet wave 5, 25,046. It can get up there, which is not really blasting all that much further over where we've already been. In fact, it's 21 points. So 21 points difference between this high at 25,027 to this expected high, if it does, turn at 25,046. Not that bad. And again, then it would be that expanding. So, but I've got that kind of fallen behind now. I do think that we're likely going to come, but you just don't know because what have we been seeing this week? In preparation for the quarter end, which is Tuesday, September the 30th, should be a large expiration. We should see a lot of activity, or maybe it'll all be done prior, which is what we're going through now. Now, we started on Monday, a lot of buying. Tuesday, Rosh Hashanah, Tuesday, Wednesday, yeah, yesterday and today, Rosh Hashanah. Thin market, light trade. But when you came in with a big order and you needed to really push some equity through or some futures through, it moved. It just nosedived. And it could nosedive again, nosedive again. And in that process, was going through volatility triggers, is going through call walls and put walls, is going through all these gamma levels. Not much put walls. Those got moved out of the way. But, large gamma 1, 2, 3, 4, all the different levels coming down along with that volatility trigger. Now, that volatility trigger in the Qs got triggered again today. Now, did it happen to take it back? Let me just double check. Yeah, it did because it was 595. So it took it back. And so when you see this, it's like it just, okay, reinstate that volatility trigger. We'll see where it comes in tomorrow morning. But it does add because we can't forget the options are trading massively. They're trading. We had Tesla today up at one point, I think $17 or $18, trading 444. Now closes at 442 and change. And it's like, okay, that's going in one direction. Apple was going in the other direction. Google was going in the down direction. Microsoft and Meta didn't understand and know really where they should be, so they went in both at different times during the day. NVIDIA tried to go higher, failed, tried, and then stuck going lower, but rotated in and out in a range which created a situation within the market, in the futures market, that it just felt like, oh my God, they don't know what they want. And it's like, no, it's not the future. It is the options trading. It is what's happening outside of this future. And that's creating the situation between the component stocks flipping and flying all over the place. So as I try to call it sometimes, when you're trying to be a day trader and we got the push-pull. So in other words, it's like Tesla's going in one direction. Now, let's not forget each one of these stocks. This is a cap weighted index. Right now, NVIDIA sits at the top of the food chain. And within the top 10 are all the Mag 7. So the Mag 7, and that's also included for the S&P 500. So when you consider that these tech stocks, the Mag 7, have that much control over not only the ETFs, not only just the futures market, but the cash markets as well. Interesting concept at how much control, simply because of how these indexes have been constructed. They're cap weighted. And we've seen the capitalization of, i.e., NVIDIA brushing up against $4 trillion. Apple brushing up against $3 or $4 trillion. I don't know about you, but that's just like an amount of money that I can't fathom. But here it is. Here we are. By the way, which is a good thing. There's that much money in the markets. There's that much money trading. Now, if we start to slow down, well, boy, we have to remember that these same Mag 7 stocks, it'll all depend on what their cash reserves are. And I believe all of them have pretty strong cash reserves. So I think that the trading will stick with us. Back to the market. Okay, so if we're labeling this as minute wave 3, that puts us in a minute fourth wave. What's it going to look like? It's going to look like an ABC. Now that's if it's going to just be a zigzag. Remember, two basic structures for a corrective process. One they're all going to be ABC based, but the first one is a zigzag, and that is like a 5-3-5. That's simple. That's easy, but that's just one. Okay. So where do the other 12 come in? Those are the different variations that also can come in within a corrective wave, and most often within the fourth. So we have diagonals, we have uh, descending triangles, expanding triangles, we have double ABC, triple ABC, and there's now even through Elliott Wave International, they kind of come up with WXYXZ. Okay, that's just a different way of saying it's a double ABC. Now, I'm a little bit too old, so I call it still a double ABC. I try to adapt. Sometimes it works, sometimes it doesn't. So what do we got going on here? I believe we're working down our first five. But what am I going to call this if it comes down and we put in that five? Sub-minuet wave one of minuet wave one of minute wave four. Well, actually, sub-minuet wave one may be of minuet wave A of minute wave four. So the first five, I'm going to call it, if I put it at five, it could be an A wave, but I'm probably going to say wave one. So we'll see. We'll see that this all would be here and not labeled A, but labeled sub-minuet wave one of minuet wave A. We got a lot of room. There's our target. And here we ran our fibs. Our target is there at 23,026. Our first marker comes in just above it at 23,287. And then our second one is 22,215. 236, 382. Most common still remains 382, but we're finding that a lot of times it's coming in a little bit shallower, particularly on our smaller degrees. And so you have to include that. But look how close it is to that level. So all in all, we're looking at or staring in the face at least probably a 1,800 to 2,000 point decline, all in a fourth wave and in several different patterns that are capable of being chartered out. Now, and also, I got to tell you, within a fourth wave, we could get in a regular B wave. So we come down at an A, go all the way back up in a B and make a new high and then come all the way back down. All things are possible. And this is all on the way to getting in minute wave four, minute wave five. I'm going to back it out again. I'm going to take a look at that daily chart. Here we are. Minute wave three, we get a minute wave four, and then we get a minute wave five up. And when it's complete, that completes minor five, intermediate five, and primary three. So we still have a rally left. I still think we can go and should go to, again, new all-time highs. We're now just in that intermittent period where we're going to put in a fourth wave correction. And it could be a good one. Just not all the way back down as I have described previously. Again, let me just go out to here, all the way down to that, ding, 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 here, to if we're coming down in a primary fourth wave, it should find its terminus, its endpoint within the fourth wave of one lesser degree, and that's the one right here. So what are we staring at? A little bit further down the road, possibility that we're going to drop to 10,400. Possibility. Our markets don't make any guarantees, and neither can I. But if we're using Elliott, well, it's kind of big window. We got 16,753 down to 10,515-ish. That's a big window. But normally it's down toward the terminus, the endpoint of that fourth wave of one lesser degree. So normally we look for it down in here. But that's out there. Our first one is going to be thinking about that, right? We're looking for this decline to take us back to here, which when I put up my other chart, you can't even see it. So lots of things to come. And through various, we're doing a fourth wave now on minute degree. We do a minute wave 5 up when we're done, and that then finishes all the way up to primary wave 3, and then we have a primary fourth wave. And that will consist of 3 waves labeled ABC of intermediate degree. A lot of fun that we have still coming. All right, so now let's kind of just take a quick review of what we have tomorrow in terms of our economic calendar. So we have on Thursday, initial jobless claims, GDP, advanced U.S. trade balancing goods, advanced retail inventories, advanced wholesale inventories, durable good orders, and that all comes out at 8:30 a.m. Then at 9 a.m., nope, excuse me, at 10 a.m., we have existing home sales. Interspersed within all of that, we have 1, 2, 3, 4, 5, 6, 7 Fed officials out giving speeches. As I've said, this all started, remember, yesterday when Jerome Powell was out speaking at some summit or some panel or some whatever and stated, answering a question, yes, he did believe that the equity markets were a little bit overvalued. Wow, okay, power of the word. Bam. We started to hit the skids. So today was just more follow through to that. But again, I believe it really was inside of rotating in and out of stocks, but gamma levels, volatility triggers, things of that nature. When they get kicked in and they get turned, bam, we get the moves. So that's kind of what's been going on today. I apologize for my a little bit being late on getting this out, but again, I had a scheduled appointment that I could not miss. All right, that is going to be it. And our next update will be tomorrow morning.